Good morning, guys, and welcome back to our channel. It is today, Thursday, the 27th of August, and we've got an amazing lineup coming up for you today. Just to talk a little bit about what we are offering today on the Collective Creative Initiative. We are starting this morning at 10 o'clock with tax advice and a Q&A with Natalie from Theataccounts, who I'll bring in just a moment. Julia Frost is back with part 3 of her puppeteering class. That's going to be at 12 o'clock. Nick Barstow's talking about constructing your own cabaret at 2 o'clock, which he has lots of experience in, and he'll be talking about that at 2. Bree Smith, who is a new practitioner, joins us at 3:15 for a musical theatre jazz dance class. And then lovely Lydia from Jiggle Fitness is doing an all levels hour-and-a-half fitness session plus stretch at 4:30. So if it's been a bit of a slow week, you can pick that up with Bree and with Lydia at the end of the day. But before we do that, I'm going to bring Natalie from Theataccounts in. Morning, Natalie.
Good morning, Rosie. How are you?
Good. How are you doing?
Yeah, not too bad, thank you. Bit miserable today again, isn't it, weather-wise?
It's a little bit of sun here, but I think we're due rain this afternoon. It definitely feels like someone's grinding it to an end, doesn't it?
It does, unfortunately, doesn't it?
So, Natalie, for anyone that hasn't joined these sessions before, tell us a bit about your background and a bit about Theataccounts as well.
Yeah, so I've been an accountant since started when I was 18, so around 18 years now, and I work as a manager here at Theataccounts, and Theataccounts is an accountancy firm set up specifically for the entertainment industry, and it's been a crazy time recently for everybody, but it's slowly starting to come back to some degree of normality now. And I just don't know where the year's gone. It's scary, isn't it? We're into nearly September already.
The other day I got my first email from, I think it was a Body Shop promoting their advent calendars for Christmas. I thought, oh, that's it. We're that time of the year now. It's just kind of all heading towards that, isn't it?
It is. It's scary. It's just, we just don't know where this year's gone.
And so what are we covering in today's session?
Yeah, so I am going to sort of go back and have a look at, again, how a tax return is calculated. So we've got some figures there and some scenarios to run through that will hopefully be useful, but also have a sort of chat about rental income, and hopefully that will be relevant to some people, whether it's you just rent out a room in your home or whether you rent out your entire home, the differences between those two things and how that affects your tax return.
Brilliant. Guys, you know the score by now, but if you want to ask Natalie questions and things, feel free to through the course of this session, then you do need to subscribe to our YouTube channel. Just click subscribe and you can ask Natalie any comments along the way. Natalie, I'm just going to pop your screen in so that you can share that as we go.
Fantastic, thank you.
Have a brilliant session. I'll see you in a bit.
Thanks, Rosie. Thank you. Hi everyone, it's lovely again to be here. We're really enjoying these sessions that we are, and working with Rosie and James here at CCI. We have, I think, probably around 6 or 7 of these now, and hopefully you have been able, you found them useful, and there's some been relevant information there for you. A lot of people have used this downtime to look at their books and records earlier, so we're sort of seeing an increase in clients sending over information to us, and there's always those queries very often about expenses, all those typical ones that we would see, that hopefully these tax talks that I've done and the areas that we have addressed previously, hopefully those have been useful to you, and give you a sort of better understanding of how it all works when it comes to tax and national insurance as a self-employed individual. We also had a look with Alex and myself about limited companies, talking about when it might be beneficial to be a limited company, and we looked at VAT as well, when it's required to become a VAT registered individual or company. And we talked briefly about those changes to VAT that have obviously temporary changes because of the pandemic. So those are available on YouTube to be able to rewatch. But if you've got any sort of questions about that that isn't covered or more specific to you, then we're happy here at Theataccounts to have a chat with you and sort of be more specific to your circumstances. So today I'll be running through slides as normal and going through again what we would typically see in a tax return and how that kind of gets calculated. We've done the hard work of working out those allowable expenses. We deduct those from that income, and then we see that then pull into a tax return. So you'll be able to literally see how what we do, the part that we do, pulling that in. So hopefully just give you a little bit more understanding of that and how that works if you've got different income as well. So not only are you perhaps a self-employed actor, you might also have other sources of income. And we talked about dividends before, being a limited company. But today I'm going to have a look at also potentially, which is relevant to a lot of people within the industry, that they may rent out a room within their home. And what happens then, most people probably are aware of that there's a rental room allowance. But I'll show you how that works on the tax return and how we sort of show that in the calculations. And we'll also talk about the differences. And, you know, there is quite strict criteria between the two of what it is to rent actually a room out, but also then to rent out your actual entire home. And those then become different and therefore addressed differently. So it's always good at some point if things get a bit more complicated to seek professional advice. So I'm going to run through the slides then and introduce myself and Theataccounts in a bit more detail in case you've not tuned into any one of our tax talks before. There's just a small disclaimer there, which is just important to add that the information that are in these slides today are obviously relevant at this point. It's brief information, and if you wanted any sort of more personalised, tailored information specific to you, then it's always best to actually speak to your accountant, or we're more than happy to sort of talk to you about it if you've got any further queries that again are more specific to you. So who are Theataccounts? So we are industry leading accountants for the entertainment industry. We have seen a rapid growth over a period of time now of about 8 years. Alex, our owner, took on Theataccounts and has grown it substantially over that time, and that's because he has a strong ethos of how we should run here at Theataccounts. We try and make tax simple in the way that we just from a client's point of view, we take ownership and we take responsibility for your tax return and prepare that for you to just make that process as simple as possible. It is obviously your tax return at the end of it, but it's just some people it's just nice to know that it's being dealt with. You can hand it over and know that it's all being taken care of correctly, because there is loopholes and grey areas, especially in this industry. So we pride ourselves on being friendly and approachable, as it says there. As I've mentioned, I'm a manager here at Theataccounts, and it's just sort of continuing to grow throughout that period. Thank you. Have a nice cup of tea. So it's continuing to grow over the period of time that I've been involved, and that's fantastic. And most of our new clients do come from recommendations. We don't just look after sole traders. We can prepare. We look after limited companies now, theatre companies. We can deal with VAT. We can deal with bookkeeping and payroll if you have a limited company, and you may choose just to take a small director's salary, or whether you employ other people, we can look after that for you. And there's also special reliefs available for our industry, like seafarers, which we are planning on our next session in 2 weeks to have a session all about seafarers and in a bit more detail about that. It's a good one if, hopefully, I spoke to Rosie about this yesterday actually, that obviously at the moment with cruise ships everything is at standstill, but hopefully when things pick up, it should pick up quite quickly and people will be able to proceed and go about onto working on a cruise ship like they once did. So hopefully once that kind of starts up again, if that's something that you are planning to do, then that would be a really good one to tune into, to have a look at how Seafarers works, what information you should be keeping out of the country, you know, your contracts, your pay slips, a diary, a log of the dates that you are in and out of the country. That's all of those sort of tips that are going to help you when it comes to preparing your tax return at the end of it. So that's a good one to tune into. It gives you a little bit more advice specific to seafarers. But just to sum it up, we aren't just once-a-year accountants here. We're here to help and advise our clients throughout the year. And you know, we're happy to. There's a great team here now to happy to help anyone who's got any more specific queries. So that just talks about our clients that we've got, which I've said this quite a few times, but you know, as many times as I say it, it's still relevant. You know, we genuinely are super proud of all our clients. We've got some fantastic clients that work in all aspects of the industry. There's just a few snippets there of some of the productions that our clients are involved in, and you know, we're really proud of them all. It's a list there as well of all the clients that we do act for. It's not just actors or performers. We've got singers and we've got dancers, set designers, their stage managers, musicians, agents, you know, TV presenters, radio presenters, a huge list of all the clients that we have. So enabling us to being able to give you the best advice we can, because we've got so much experience with a huge array of actual variety of jobs that our clients do. So let's have a look then now and kind of do a bit of a recap really before we kind of go on to the next slide. So we've previously talked about your self-employed income, and we have also talked about those allowable expenses, and we went into more detail actually on the last session about that. So if you did want to refresh yourself or look at that, if you haven't tuned in, that one where we really looked at those expenses in more detail, and we talked about the duality of purpose on some expenses that make things a bit harder to actually extract that business element from. So we really went in and gave a lot of information about those expenses and those that we would typically see in the line of work in this industry. So if you haven't seen it, haven't looked at that, do have a look, and also check out our website. We've got a blog on there that actually says on there the typical expenses that we would typically see on a tax return or for a client. So we get to that point where we've already spoke about those expenses, and then we essentially are left with a profit figure, and it's that profit figure that then gets taxed and national insurance gets applied to that as a self-employed individual. So that's what I'm going to look at again in a bit more detail today. So we'll run through those, lots of figures to go through again. So let's just go on to the next slide then. So tax then. Once you know your personal allowance, which is obviously, as it says there, £12,500, that can alter. It depends if you're sort of a high earner, that can actually be reduced. But most people will have an allowance of £12,500 that they can have income without paying any tax on. After that, at that point, the amount from the 12.5 onwards would then be taxed at that basic rate of tax at 20%, as it says there. From that point onwards, if you then fall into a higher rate of tax, a high rate taxpayer, your income from 37,501 up to 150, so just that element of your income that falls within that bracket would be then taxed at 40%. And then we've got that additional rate of tax of 150. But remember, at this point, you're going to start losing essentially all of that personal allowance. But that additional rate of tax then is at 45%. It just says there, if you pay tax on your PAYE income, this can be offset. So you'll see those in an example shortly, where we pull together a scenario where there is self-employed income profit, and then also PAYE income, and potentially that individual may have paid tax at that point through source. So we look at the example there and how that's taken. But that there is a basic slide of what tax rates are applicable for our current tax year, for here, for when we then start applying these to the figures. So it just, as I say, you only do pay the tax that is relevant to that proportion of income that falls within those tax bands. Let's have a look then, as a self-employed individual, that you'll also be subject to national insurance. So while income tax is important, it's also important to remember that it's not the only thing that you will be subject to. You will also need to pay national insurance. And being a self-employed individual, there is two classes of national insurance that's going to be relevant to you and that you would be required to pay. So we've got here your class 2 NI. So that's currently, it is £3.05, I think, actually, for the 2021. We always say, like currently, we are doing tax returns for 1920. So my brain is still in 1920 tax rate mode, if you like. But obviously, we're actually in now our next tax year, 2021. So all our examples are for our 1920 tax year, and that is set at £3 per week. You only need to pay class 2 national insurance when contributions are payable when profits exceed that 6365. So it's only when your profits from your self-employment exceed that figure, 6365, would class 2 national insurance be applicable, that you would need to pay that. So it's just a set figure, £3 per week, that you would need to pay once your profits exceed that. That's a flat done. And so it doesn't matter after that, it will just stay at that amount. And it just states there, however, voluntary payments can be made if your profits are lower. We would always recommend that you do that. If your profits are less than 6365, no, you don't need to pay that class 2 NI. However, we would always say, do pay it, because it just means that you put in a tick into that box, into the contributions towards those state pension, any employment and support allowance, as it says there, maternity allowance, and bereavement support. So if you need to be consistently contributing to that pot to ensure that you get your full entitlement, I suppose. So we do have clients that come back and potentially have had gaps in that, and that could cause problems later. And that is what we would always say to you, to continue to pay it voluntary. There is ways that you can look at paying some voluntary class 3 if need be, but again, if potentially you feel you might have a gap in your NI, that's a really good point when you need to probably get an accountant on board for you, where we could look at that in more detail for you specifically and see whether we could look at being able to top up those national insurance contributions so that you can still claim for those benefits listed there. We'll look at those in a bit more detail as well when we look at the figures shortly. So we've got there as well that, as I say, as a self-employed individual, you are also going to be subject to class 4 NI. Now, this is basically just another tax, okay, in the simplest form. It doesn't count towards any state benefit, and it's just disguised as class 4 NI. How is that calculated then? So you're thinking, well, okay, you're telling me I need to pay class 2 and class 4. How do we work out how much class 4 potentially that I would need to pay? Well, that's based on your profits again, okay, and that's got a level. So that level is that 8632, which is listed there. So once your profits start exceeding that figure of 8632, you know then that class 4 NI is going to kick in. It's going to be payable, okay? So that is not a set amount like Class 2 is. That is actually based on your profit at 9%. So it's a 9% charge on those profits that exceed only the 8632. So you don't need to pay up to 8632. It would just be the proportion of your profits that exceed over that amount. We would then charge at 9%. Okay. As I said, if you feel potentially that there may be gaps in your Class 2, please do seek advice from an accountant at that point, who will definitely be able to help you. And we all think, oh, pension's a long way off, it's nothing for me to worry about. And you know, for most of you in the industry, it is a long way off, and who knows what will happen. But you know, for the ladies there, maternity allowance is also included in that Class 2. So that's important to remember. You know, if you're thinking of having children, you know, in the near future, the next sort of 5 years, 10 years, you know, that's more relevant, and it would be important for more so perhaps for the ladies out there that, you know, you would consistently have a tick in that box for your Class 2. I'll just put a note here: when you register with HMRC as self-employed, once you do that, that obviously covers you for tax and NI. That's the registration with HMRC is setting you up for both of those. There's nothing that you would need to do any separately. Once you register with HMRC, they are going to know that you need to start paying NI and tax. Again, just a small note to add that isn't on the slide there. If you're employed as well, and that's really common, you might well have a job alongside being self-employed. Lots of our clients do. So you may well be paying some Class 1 national insurance through that. Again, that's when you probably would need to seek an accountant to have a look at your figures for you to make sure that you're just paying the right amount of NI and not duplicating any contributions there. So again, if you are being charged NI in your PAYE work, might be worth getting an accountant or seeking an accountant's advice at that point. Okay, so the only other thing we've got here on the slide as well is student loan. So another deduction that can be taken from your tax return is a student loan if you should have one. And there's two student loan plans in place. So there's Plan 1 and there's Plan 2, but there's also, the postgraduate one as well. So those have set criteria. When your profit exceeds those figures, then you will need to start repaying those student loans back through your tax return. Again, if you have employment, and you may also be paying back in that employment some student loan, be careful, because if you've then preparing your tax return and then it's being calculated in that. So that's another point that you need to make sure probably that you check that and an accountant has a look at that for you. But ultimately, that's the figures there when your profits start exceeding those on Plan 1 and Plan 2. You'll know which plan that you will on, and say postgraduate is slightly different there as well. But that's something that if you appoint an accountant, you just need to obviously let them know that you do have a student loan in place and which plan that is, so that can be incorporated within the tax return. Okay, let's look at some numbers then, which hopefully will sort of cement some of the things that we've been talking about. So I'm going to, let's go back. I'm going to have a look at these ones first and just kind of touch back, and then I'm going to go back and talk about our rental room. So these are just in its simplest form here, that's just relevant to what I've just been talking about. So let's have a look at scenario 1. We have got a self-employed individual here of income of £6,500. Their self-employed expenses that they have calculated, allowable expenses, amount to 3,000, which is giving a profit of 3,500. That's the figure that's going to be pulled across to the tax return, and therefore the tax and the NI is going to be applied to those figures. So as I mentioned, you get that personal allowance. You get £12,500 of income that is tax-free. So you can see here on this example, we've deducted that figure. the profit is well under that, therefore there is no tax to pay. There isn't either class 2 or class 4 due. As you can see from that tax table, which is what I was just saying, it's only relevant and will only kick in national insurance when those profits exceed those figures. When your profits exceed 6365, should class 2 kick in, and when your profits exceed 8632, class 4 will kick in. In this situation, this scenario, with £3,500, we're well under there. But it's going back to what I've just said. We would still recommend that you tick that box and make that voluntary contribution for class 2 NI. So there you can see, although it's not due, it's not applicable, it's still, we would still always recommend that you do it. So that's there, £156 that is then due on the 31st of January 2021. We talked about before plenty of times about the point at which you can do your tax return, or when you appoint an accountant or get them to do it for you. So once that tax return has passed in April, you can get your tax return done at any point after that. And we would always recommend it. January is absolutely manic for the amount of people that do leave it until that month. But once April has passed, you do have the option, therefore, to provide your information to your accountant, do your own tax return at any point. It doesn't mean that any tax due would be also, if you file it, let's say now, that tax would be due now. It wouldn't, it would still only be due on the 31st of January. So that's just important to note, really. I think some people may think that, oh, well, I don't do it early because I don't want to be paying any early. No, actually, just by submitting it earlier, it's just one less thing to worry about. Done, sorted, and actually gives you more time to prepare for that tax bill potentially in January. And also, we'll look at the scenario shortly about this. It could well be that actually you might get a tax refund. Maybe you have ended up paying too much tax because you may be paying tax at source through employment as well as being self-employed. So it might be another reason why you might choose to do it early, and if you do, you'll get that back actually early. You wouldn't need to wait till January for that. So that's just scenario one in its simplest form there, that just shows really sort of small levels of profit and just showing that we would always recommend that you would tick that box for your voluntary class 2 and make sure that that was being paid. This person doesn't work anywhere else. This is their sole form of income. Let's just have a look at scenario 2 then. So the only difference on this one is that we now see class 2 national insurance becoming compulsory. So we see an increase in the profits here, and you can see we've still got that personal allowance being deducted of 12.5. So this individual can earn up to £12,500 without paying any tax. That tax due is nil. But now, because those profits have exceeded the 6365, you will see that £156 is automatically due. And therefore, again, that's due on the 31st of January. Look at the figures here. You know, look, the income is nearly 10,000. We've got expenses of 2.5 and profit of 7.2. You know, those are the sort of levels there that, you know, you're not going to end up with a huge tax bill. You know, I do talk to individuals, and I do a lot of tax talks with graduates now, and you know, they're advised, a lot of them come back to me and say, I've just been told I just need to put 20% of my income away in another bank account and not touch it. You know, 29%. And yeah, in theory, if you did that, fantastic, because there's nothing worse than getting to January and having a huge tax bill. However, on the flip side of it, it all depends if you're going to start paying tax. So this is giving you an insight on where that would leave you. You know, if this individual has been put in, their income is 9,700 and they've been putting into a separate account 20% of that income, you know, that was obviously not too much and didn't need to be that much. So it's just having an understanding of the numbers and understanding roughly where you are with your tax return ultimately. It's got to be the ownership of it and responsibility of it lies with you as an individual. Even if you're an appointed accountant, you know, we obviously can help and make sure it's correct, but the ownership is on you. And more so, obviously, if you're doing it yourself, it needs to be correct, really, and to avoid any complications or problems later. We're having people, clients coming to us recently who have done their own tax returns, and it's only now come to light because of the grants that have been available to people through the pandemic, that potentially just very small errors have been made, just perhaps putting some income in the incorrect box and it's being shown as employment rather than as self-employment, and therefore they've not been actually eligible for any grants. Those sorts of small, very easy mistakes that can happen can have consequences later. So, you know, it is an important document and it's always important to make sure that it's done correctly. But having an understanding of it as a whole is vital, really. Scenario 3, let's just go, I think I got to about scenario 4 or 5, and then we'll stop and then talk about rent a room and look at some scenarios of how that affects things. So what have we got here in scenario 3 then? So it's just the introduction here of class 4 now becoming due. So as I said, unfortunately, it's just under the tax. We've got our tax table there on the left that's relevant for the 1920 tax year. And let's have a look here in scenario 3 then. So we've got self-employed income now of 13.5. So we've seen an increase here, and we've got some self-employed expenses of 4.5, whatever they might be: agent fees, travel expenses, subscriptions, headshots, all of those typical expenses that we would see in the industry, result in self-employed profit of £9,500. We pull that, as you can see then, to the calculation to then work out how much tax is due for this individual. Again, under that £12,500 personal allowance. So there's no tax due. You can then see that class 2 is there of £156, which we've talked about. We've exceeded that limit there of that 6365. It's just due. It doesn't change. You just exceed it, and it's set. It's set about £3 a week, but paid in full at the year on the tax return for the full year. So there's that £156 going in for 1920 tax year. £156 there, and then we've got the class 4 coming in there at differently at £78.12. So remember, with this one, it's not done. It's done differently. It's taking that profit of 9.5, and we deduct from that allowance of the 8632, and it's just the difference. So in this example, the 868, so it's just that amount that exceeds that allowance of 8632 that is then charged at that 9%. So we can see that going in there, which works out at £78.12. So those added together means that for this scenario 3, for this individual, the total tax due for them is now, we've got some class 2 and class 4, a total of £234.12. So again, look at those figures. Their income's 13.5, their profit is 9.5, and that's the relevant amount of tax then that's going to be due for this individual in this situation. Scenario 4 then is just the introduction of now tax being due. So you can see that here, hopefully in its clearest form. Hopefully it's clear to be able to see how we've done this. So we've highlighted it green here, which is relevant to obviously the tax part on the left. So we've got here in scenario 4, we've got self-employed income here of £15,500 that is due, that's been earned, and then we've got self-employed expenses there of 2,500. So the self-employed profit is 13.5. That's the figure we're pulling across here. So now what we can see is that that profit has then now exceeded that personal allowance by £1,000. This individual has now got £1,000 worth of taxable profit. Okay, so So that £1,000 is taxed at 20%. So the tax due on that £1,000 of taxable profit is £200. So you'll see that there. We've got your class 2, normal, staying in, and then we've got your class 4 going in there of 43812. Okay. Again, how do we work that out? Just to quickly go over again, we've taken that £13,500, we've minused off that 8632. It's only applicable when your profits exceed that figure. So the difference between those two figures, 4868, I've got written down there, we're timesing that obviously by 9%, and that's where that figure's come from. And we've got there those. Okay, so scenario 5 is a good one actually, and quite relevant. So let's just look at that before, I think the next one might be, I'll do 6 and then we'll go back to the renter in. So with scenario 5 then, we have got an individual here, and this is quite relevant to quite a few of you, where you might also work alongside being self-employed. So we've got, looking at just the self-employed part first, that middle box, we've got self-employed income of 18.5, we've got expenses of 4.5, and therefore the profit 14.5. Okay, so that's fine, we've done that part. That gets pulled into this individual's tax return as self-employed profit. However, that individual also works somewhere else at the weekend. So they work in a restaurant, and for that tax year 1920, they have also earned, through working at that restaurant, £3,500. So actually the combined income for this individual for this tax year is 18,000, okay, with those two splits. So we combine those together, and that's we then deduct that personal allowance. So the £12,500 comes off. So back to what I was talking about, where we say, well, of that £18,000 profit, we take off the 12.5. This individual has £5,500 worth of income or profit that needs to be taxed. Okay, and that's where that tax figure then has come from of 1,100, and we've taxed that at 20%. However, we have been able to establish and see from that individual's P60 that they also paid some tax through that employment in the restaurant. So they were taxed at source. So you can see there, we've got the 18.5, and we've got the 12.5, and the difference, which is coming up at 700 times 20%, which is 700. But they've paid that. They've also paid tax on the PAYE, and that is being £700. I'm completely confusing myself here looking at them. It's because I've had a drink tea. So the tax due is 1,100. They have already paid tax at source of £700. Okay, I'll just make that a bit clearer. So actually the tax due is 400. Okay, so they've already paid 700 of it at source, taken straight away, like I would here, being employed at Theataccounts. I pay tax at source. So this individual has already paid £700. So actually the tax therefore is due is the 1,100, which we calculated, minus £700 is already paid at source through that restaurant, meaning that the tax due then is 400. We can then see that class 2 and class 4 kick in. Obviously, that's only relevant to that self-employed profit. Okay, that's when we only do those calculations. So the 156 stays the same, and then we've got that class 4 NI going in at the 9% on the difference between those profits that exceed that 8632, and we've done that at 9%. And therefore, for this individual, they need to pay that £1,084.12 by the 31st of January. But it's just a good example to show that this is quite relevant, that we will see a lot of clients in this industry that will be paying tax at source, and how that works. How does that get incorporated? Very often clients will come and say, but I've already paid some tax, what do you do about that? And this is what we do. We say, well, okay, we work out what you should pay as a whole, and then we deduct from that what you already paid to see what then is left on that. Okay, it gets more complex when you start working abroad. Okay, that's different. It talks about withholding tax then. And that again is another point where we couldn't stress enough that an accountant is best point to have an accountant on board if that's the case. That gets more complex where potentially we can offset tax that you may have already paid in another country, but it all depends on those tax rates in that country, and it's a little bit more complex. So it does, if you are one of those individuals where you're actually doing that and working abroad, then it's really important to seek advice from an accountant at that point. But here, again, hopefully in the simplest form, apart from me talking complete gibberish in the middle when I have my cup of tea, hopefully that makes a bit more sense now of how that works. Okay, so let's have a look at scenario 6, which is talking about payments on account. So I've said this a few times, but if you've not been in one of our tax talks before, this is quite relevant. If you start paying more, or if your liability on your tax and your NI4, if those two figures exceed £1,000, then what will happen? It will trigger payments on account. What are payments on account? It's when you are required to start paying next year's tax bill in advance. Okay, so you would need to, it's based on the figures that you've already provided and submitted, assuming you're going to earn a similar level in the next financial year. And then what that does is there's a calculation which you can see there that we work out, and we assume that working out that you're going to earn a similar level in the next year, that you're going to pay 50% of that in January along with any balancing payment that's due, but also then you'd need to make a second payment. Again, remember these are based on estimates, in July. And the purpose of that is by the time we then get around to doing the next tax return, you've already made 2 payments towards that we can then deduct from. So essentially, those should be there or thereabouts right. Now, we're at a point now that things have changed. Potentially, you may have already had these set. The July one that we've just passed has been, as you're probably aware, deferred until January. But by that point, you would know what those figures are. We also have the opportunity, and you also have the opportunity to amend those payments on account figures. So it could be that actually you know that your income in that following year is not going to be the same as it was the year before. Potentially, you know, COVID's had a huge effect on that, but potentially you did maybe had some voiceover work in 1920, which is, you know, a great amount that you received from that you know you're not going to get that same level again. That happens because the industry is so up and down. If that's the case, then there is an option to be able to reduce those payments on account if you feel they are set too high. I'm saying, well, I'm not going to earn the same level as I did. I can't afford to be paying that much. It's not relevant. So you do have the option to reduce those payments on account. It's something that you can ask your accountant advice on, and they can assist you with that. The only thing to be wary of is that if you did and you incorrectly did, so you reduced them too much than you should have, there will be interest charged from HMRC on that. So that's just something to bear in mind. But again, if you're in that situation where potentially your payments on account are set too high, do seek an accountant who'll be able to get in touch with us. We'll be able to give us some advice and help towards potentially reducing those if that's required. But as I say, in this example here, we can just see, I won't run through all those figures again, but you can see that profit being pulled in. You can see the tax that's therefore due on that income that exceeds that personal allowance. You can see that class 2 and class 4 being due, and there's a balance in payment there of 1374. But because the tax and the class 4 NI add up and exceed £1,000, payments on account of kick in. We work that out by adding those two figures together, dividing it by 2, assuming you're going to earn the same level next year. That then comes out at 2 amounts. The first payment on account due the 31st of July, 60906, and the second due on the 31st of July, 60906. So you would need to therefore on the 31st of January make that balancing payment, but along with that your first payment on account and your second being due on the 31st of July. It's always a hit in the first year, and there is clients that are not aware of this, and if they have left it till the last minute or they haven't been aware and not been saving enough or whatever, it can become a bit of a shock. So be wary of it, and again, happy to help or give you any sort of more tailored advice if you should need it. But there you go, just something there to show you how it works, hopefully in the simplest form, so that you can understand what kind of income and profit that you're going to be, where this is going to start kicking in and be relevant to you. Okay. Scenario 7, let's just run through that one because it does just show the student loan, which I have mentioned. So the only difference here in scenario 7 is that we start seeing the repayments for this individual of a student loan that they need to therefore start paying back. So this example, we can see here it's the plan 2, so the 26,568, because their profits now exceeded that figure, they're going to have to start paying back some of that student loan, and so that gets incorporated in the tax return. And as I say, this one, you can see those levels are high in terms of their income and profit. And you can see that we've got tax, we've got class 2, we've got class 4, we've got a student loan going in there, we've got a large balance in payment. They're also assuming this individual is going to earn the same level next year. Therefore, we've worked out those payments on account to be this, 271156. So we've got a larger payment there due on the 31st of January of 8599 there. And again, that second payment account therefore is due in July. But it's always a hit in the first year. After that, it's easier because then you will be doing that balancing payment and you'll be able to deduct from that those two payments that you've already made. And then you just be paying obviously again for the future. So it's just the first year that's the kind of the biggest hit. Okay, so I'm going to go back to talk about the rent room now. So let's go back to that one. There you go. It's slow, isn't it? Okay, so there we go. We also see a lot of clients that might be away from home. They work in London in the week. They may work away at some point. It's quite a common thing in the industry. So there is actually something called the rent-a-room scheme. Now, what is that? So that lets you earn up to £7,500 per year tax-free from letting out furnished accommodation in your home. That's what it is. Okay. However, if that allowance, if your income is with a partner as well, so you both are sharing that income, that allowance does get halved. However, if you're living alone and it's your own property, that is your mortgage property, and you can do this if you're renting as well. But if, let's just say in this example, if you the mortgage property and you just decide to rent out a room within your house, because for whatever reason, you can do that, and you can have up to £7,500 allowance in a tax year, without having to pay any tax on that. Okay, so that's something to bear in mind. It says you can let out as much of your home as you want, so it's still got to be your home. So that's an important point to make there, that it's got to be your main residence. That must be your home as well. But if you've got a 4-bedroom house, you might choose to rent out those other 3 rooms, and that's fine. So you can then collect in rent off those 3 individuals in those other 3 bedrooms, and then for £7,500 of that, then you won't need to worry about paying any tax on it. Anything you exceed on that would then become tax payable. So that's just saying there that there's just a few criteria. It must be a main residence to be able to make use of this scheme, and it must be furnished. Now, the difference between that is the other one where you might decide that you are going to rent out your entire home, which is a totally different thing, okay? So if you are not on the rent-a-room scheme, you'll be charged income tax on any rental income minus letting expenses. So what would we typically see as letting expenses? So if you rent out a property, what will we see? So we're going to see typically insurance, potentially maintenance costs on that house. You're going to see your finance costs, obviously your mortgage if there's one in place. Those are subject to restrictions. So again, that all depends on the mortgage that you have, the potential interest that you are paying on that mortgage. So that's when things do again get a bit more complex, and that's a good point if you were in that situation to have an accountant do it for you. So that though is still a typical, along with letting agent fees and repairs, utility bills. These are typical expenses that we would see if you have rental income. Okay, so there's a difference between it being your main home and renting out a room or 3 rooms in your home, and then renting out your actual entire house. Then and that becomes rental income, and that's done separately. How does national insurance work with all this? So you will only pay national insurance on your rental income if the level of activity amounts to running a business. That's a separate thing, and at that point, again, that's more strict. It's good to get an accountant's opinion on that. If you're renting out your property short term whilst on tour, no national insurance will be payable. So it all depends as well. You know, if you are on tour for a certain amount of time, again, that's when it just becomes a little bit, it's still got to be your main residence. You still need to be able to potentially come back at weekends or whatever. And that's when it does become, you know, just you've got to be careful of the difference between rent-a-room and then it becoming actually a rental property. And then generally, no national insurance will be payable on rent-a-room income. So to sum up, there's those 2 options there. If that's something that you do, you are able to rent a room out within your home, and you can do that, get an allowance of £7,500. You might just choose to rent out a room for 3 months, let's say, and you could still utilise just that 3 months, the 7.5, if that makes sense. Or you might do it for 12 months, and obviously that would reduce down. Or, as I say, the other is where we're actually doing rental income, which is the entire property, and that then is taxed and dealt with separately, differently. So let's have a look then at how this works in terms of figures. So let's move forward to those. Okay, so there we go. So we've got here, similar to what we've just seen, just to show you how it works. So we've got here some rent-a-room income. Okay, so just that table on the left is the same as what we've had in the previous examples. Let's have a look here then now of how this works for this individual. So this individual is a self-employed actor. So they've got income of 15,000. They've got allowable expenses of 2.5. So their profit is 12.5. They've also got rent-a-room income. So they have a room in their house that they are renting out to their friend. So that income for that tax year 1920, the combined amount for that tax year that they received from their friend for renting out that room is £6,000. So you can see now how that gets pulled across in terms of working out what tax and NI is due for this individual. So we can see that profit there of 12,500, and we can also see now this rent-a-room income coming in at 6,000. So we can see we deduct the personal allowance. So actually there's exactly on that figure of 12.5. So there's no tax due on that self-employed profit. That makes it simpler. And then we've got that rent-a-room income of 6,000. Again, that is under that threshold of the 7.5. So that it's fine. They're under that threshold for rent-a-room allowance. So you can see there is no tax due. What is due is just that normal class 2, because those self-employed profits exceeded those thresholds. and you can see your class 4, which is your calculation on the threshold at 9%. So actually for this individual, they've been able to get income of another £6,000 by simply just letting their friend rent their room, and it has no implications on their tax. So you can see that here. So it's a good way of earning extra money. If you've got a friend that needs accommodation, if you wasn't aware of this, it could be a good option for you to earn extra money without having to worry about paying tax on it, really. But just be wary of that allowance there of the 7.5, or if you obviously share with your partner and therefore the incomes together, it would have to be halved. We've got scenario, the next one here, we've got 9. We've got just showing here rental property. So the difference is here now, okay? Just try and keep it in its simplest form. So this is different now. So this individual has a house that they rent out, okay? They don't live there, they live elsewhere. This is a separate house that they rent out. So they are a self-employed actor as well. We've got that self-employed profit there of 12.5, and we've got rental profit there of 6,000. So this is different. This is rental. So it says profit, so we're going to have probably income, and we're probably going to have some allowable expenses that we've seen, some maintenance costs, the mortgage interest costs, finance costs. We've got a proportion of those, and other costs associated with that rental. So those get deducted off to then bring in a rental profit. Okay, so just remember this is profit now we're talking about, and not actual rental income. So the £6,000 gets pulled across. You can see as normal, we've got that personal allowance coming off at £12,500. So that, again, we've kept it simple just to show actually the only tax due now is going to be on that rental profit there. So at the 20%. And then we've got the class 2 and the class 4 NI. Okay. And we've got there the tax due there, one of 170412. So just sort of in its simplest form, just to show how that would work. So that's pretty much it, I think. We've just had a look at the numbers, haven't we? And we've sort of just touched a bit more on rental. I will stop sharing and then answer any questions. Just before I do, there's just some contact us information there. So we've got Alex, as I said, who's our owner here at Theataccounts. We've got his email address. If you've got any queries, then drop him an email. There's my email address. So if there's anything you want further clarity on, really, that's more specific to you, I'll try and keep it just general, try and keep it quite basic. But if there's something that is more specific to you, then please do get in touch. We'll happily sort of give you some more further advice or quote you for potentially any tax returns you would like us to prepare for you. Our website address is there. We're on Twitter, we're on Facebook, any of those things. Please do get in touch. So I'll stop sharing now and just see if we've got any questions. Has that worked? Let's have a look. Yeah. So no, I don't think we've got anything. I have, sorry. So a couple here. Good morning. Lorraine. Hi, Lorraine. So morning. I was just wondering if Theataccounts work with any co-op agencies or clients involved in co-op entities with additional complications. So yeah, just please, if you've got my email address there, get in touch and we can go through and help you more specifically. There's nothing that we can't help you with, and we can get in touch and help you with that. We've got Jenny Luke. Hi, I was hoping to buy a house with my fiance. As I am self-employed, I was wondering if you have any tips to secure a mortgage. Should I claim less expenses to make my profit higher or to borrow more? The answer to that is obviously no. You would expect, you know, you need to do it in the normal way. You've got your income and you've got your obviously allowable expenses that you would need to deduct from that to show a true representation of your profit. It's always a good thing with a mortgage, being self-employed, however, is to think in advance. So if you're thinking, I want to move house in 2 or 3 years' time, it's always good, being self-employed, to seek advice from an independent financial advisor and have an accountant on board. And then they will be able to say to you, well, these are the kind of levels of income and profit that you need to be at to be able to get the mortgage that you would need. Is there anything else? I don't think we've got any others. No. Okay. I think then we will leave it there. As I say, my contact details have been on the end of the slide. We do a few of these now. And you know, please get in touch if there's anything more tailored that you would like us to cover. Our next one is going to be seafarers, so that will be quite relevant to quite a few of you, I imagine. As I mentioned before, that'll be in a couple of weeks, so do tune into that one, and hopefully that'll be some use for you and give you some relevant information to support you. So thanks very much. Bye.
Hi guys, we seem to have lost Natalie, maybe some technical issues at her end, but I think that pretty much wraps up the session. Jenny, I don't know if we got to your question just yet, but feel free to email over to the Theataccounts team, to either Alex or to Natalie with your questions. And as Natalie said, they are really happy to answer any queries you have. They are also available to take on new clients if you are at a point where you think you might need an accountant. These guys are fantastic and really, really experienced within the industry, looking at taxes for entertainment. Good. So coming up next, I wasn't ready to come back into the live stream, so let me have a quick look. We have the lovely Julia Frost with us at 12 o'clock in just an hour. She is doing the final part of her puppeteering class. Amazing stuff she's been doing. Rachel, thank you so much, Natalie. This has been another really helpful session. Appreciate your time this morning. Guys, we'll see you back at 12. I hope this has been helpful. And as we said, if you do have any questions or we didn't get to answer your questions today, do email over. All the details of how to contact Theataccounts are in the description underneath this session and also on the faculty page. See you.